Guys, quick video here. So just wanted to break down this Aussie dollar trade that was taken maybe around last week now. It was very close, very touch and go. So I'll explain why we wanted to go long. So we could see price has broken out of this descending channel here, and we were simply just looking for a continuation pattern to around highs, or at worst case sort of a weekly 50 EMA. So you can see you've got a good level of support here, and then you've started the breakout here engulfing these two, and then you can see the momentum happening. So on the daily it's a little bit more clear, so you can see huge momentum. So that's engulfing 1, 2, 3, 4, 5 candles all the way up, and then this was when I was really interested in the trade. So around this sort of level we saw that nice daily bearish close, and I'm starting to get interesting, just looking for a continuation higher. So when you look at it like this, sorry, it is a fib within a fib, which I'll explain in a minute, but you can see you've got the low, you've got the top, and then you've got 382, 50%, 618, and then 78.2. 78.2, I just always have it. Ideally I like to keep my stop behind 78.2, and that's sort of like the point of no return for me. So sometimes you do see that you might get sort of a spike past 618 here, and then it will come all the way down and sort of just here. But if we see price come over here, normally it's invalid. So I like to have my stop behind here if I can, but sometimes you can't. So if we go on if I show you on the 1 hour, it should make a bit more sense. So this was the 1 hour. So this was the entry, which was simply just the breakdown, and then it looked like the move up to retest that 1 hour 50 EMA. So that was my entry, and then you can see, so I'm really very close here, but there was nowhere really to have my stop, because if you were just to have your entry here, have your stop behind here, it would have been a valid position. But the only reason why I didn't like it too much is because price never actually rejected this level here. So you can see sort of those wick spikes never rejected it, which just meant that there was a high probability that it would have come down a little bit lower. So this was just huge breathing room, but I just done a 50 pip stop. I think I was on my phone at the time, so I didn't really have enough chance to sort of size it out properly. The reason why I've closed this slightly early, because you can see sort of you've got your high, the top target would have been 1.6 on the Fibonacci extension, but I've started looking at this just sort of 10 minutes ago, and you can see you've got your high, so it's already a sort of a channel. You can tidy that up if we really wanted to. And then if we go in, you can see double top formation, and then I've literally just closed this on this 5 minute 50 EMA break, drawn this sort of trend line in. I was going to wait slightly more, but if you look at it, I mean, it's overextended. We'd be expecting some sort of pullback here anyway, maybe to go long, but it is overextended, so it's probably not something that I'll look to enter, especially sort of in this Christmas period. I just wanted to get out of it really, because it's just added risk. But that's the breakdown. Closed it, so just under 2%, which normally I wouldn't go for, but obviously if you imagine here, this would have been it, so it would have been close to a 3% position. So one of them, but it's profit, so it's move on. And now this will probably be my last trade of 2019, so I should be able to work out sort of my annual percentages and go from there. But when I last counted, we were floating at around about, I think it was around about 82 or 83%. So this might just bring me up to the 85% mark, which is fantastic.